All right. Hey everyone, it's Nordic Trading Lab here. Today I'll be doing a breakdown of US30 this week, how it has gone, how you should have been viewing the market, and how you should be essentially uh, been trading the market this week. I usually do this privately. At the end of every week, I go over and review certain trades, the markets, how it went bad, what could have gone better, and etc. I'll be spilling you some secrets here. This video, so make sure you're in, drop a like, subscribe. Uh, I hope you guys can learn something from it. It's going to be totally raw and unedited because I don't have time for that shit. Um, that's pretty much going to be it. All right. So let's see. Where can we start here? I'm thinking we start from the beginning here. I'll just be keeping it simple, stick to the H1 time frame. That's optimal for the entries and so on. US30 in general has been in an uptrend uh, for I don't know how long, since April 2025, and it's just been going like a rocket. So the general trend is bullish. If you look at the time frames, the lows have not been breaking, always been sitting here consistent and untouched for the most part. So basically, if we start by start from here, let me see if I have the little, where's the damn tool? Vertical line, just to make it easy for you guys. Here we have it, Monday, 5th of January. We start by going here. As you can see, we initially had a huge push up, all right, going with the uptrend. We took a little break here just to regain some buyers in here. What left us was this initial big imbalance here that was created because of the big move and huge amount of orders coming into the market. Now, some people like to call this a fair value gap or other fancy rebranded ICT concepts things. I just like to call it for what it is. It's pretty much a volume imbalance. Um, so essentially, what happens here is that price has to come down and rebalance one way or another. As you can see, what happened here is if you were trading, what you should have been waiting for is some sort of pullback, right? And what we were waiting for was just one single pullback. We had that beautiful H1 engulfing candle that came in, and we had a nice pullback coming back into this zone right here. There we go. Further, what happened? Well, the price pretty much rejected this zone immediately, go in that deep for it to react, which tells us that this is a very important zone. We have a strong area of buyers here. So what happens next? As we react away from this zone, what we can expect is price to come over here and pick out the previous. That should be your first profit target. Okay. Um, and of course, if you're looking for entries, always use the corresponding time frames, H1, 15-minute time frame, and etc. But if you want to trade H1 strictly, then you can also go in here and just wait for the break of the structure or something, or just wait for a few bullish candles to play out. So you basically use this as a confluence, this zone, the rejection, and then you're looking for the expansion to the upside. And if you use some fibs, you can make a projection on that part where the price is gonna land roughly. And you can also tell by looking at the candles. Candles usually tell you everything you need to know, guys. Okay, it tells you the story. You just need to know how to read them. Okay. When we come up here, we can see that there's some sort of exhaustion. You can see the candles, they are shrinking, shrinking, shrinking pretty much. That pretty much tells us that buyers are jumping off the train and we might see some sellers step into the game, okay? Next thing that what happens is we get a huge bearish candle. Um, Pretty much wipes out how many candles? 1, 2, 3, 4, 5, 6. Well, at least 10 candles from before. Tells us that the bears are back in control. Okay. So, what can we expect from here based on this? This here as well for you guys. Well, we can expect a bearish move to the downside. Okay. Expect a retest of the previous lows. We can expect a retest of the structure. And then we can take it from there. So what happens? We make this huge candle, we come down here, and look at this. Oh boy, trading view, don't do that to me. What happens here? Look at this. Retest. Spike to the previous high. Exactly. We get a rejection of this area. Small amount of buyers step in, right? Some people would probably get faked out in this move. I know that I wouldn't enter on this yet because there's no structure in place. When I enter trades, I always, always, always look for structure, okay? Because that's how the big banks trade. You never enter in the middle of a zone. And a simple way to know if you're in the middle of a zone or not is just pull up your fibs, okay? Take the lowest point, draw it up here. RV percent line or above, or we're just sitting right at it. This is pretty much the middle of the zone, okay? So, if you're holding from here, you might have trailed your stop loss or just put it right at break even and we'll keep waiting for it, okay? One thing that I would tell you guys is that we also need to think about is the lows have not been swept here, okay? One thing that's important is that the lows do not always get swept, okay? It's a common misconception. People think that every single low is gonna be swept. Not true. Um, Sometimes it happens, sometimes it doesn't, okay? You just need to consider it. It's everything you need to do. Now, what happens? We get a bullish candle, and then the candle after that closes bearish. And what happens? We continue through this support. We break it, go down, 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 take out the low from before. You see? Wicks, 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 wicks. Another tip is look at what happens in this zone right here. Right here. All right. So check and see. And what do we have here? Similar to here. Just look at it. Take a minute and think about it. See the pattern? Same pattern is repeating, guys. That's how the market works. Okay? So, sellers are dying off, candles are getting smaller, and we're probably accumulating. Okay? And what are we accumulating? Buyers. Buyers. Oh, if you were in here and were focused during this trade, what you could do is wait for a small break here, structure, to enter, or you could just sit and wait for the momentum. The bullish candle here. Then we had a huge bullish candle coming up, rejecting this level, okay? And if you guys remember from before, I told you usually price moves the lows to the highs, seeks liquidity, okay? That's how the market works. That's the way it's engineered. That's how the big players move, okay? They don't trade in the middle of the ranges. They trade at the top and at the bottom. And it's the same way retail traders trade. Usually, if you take a trade, what do? You place it at the bottom, okay, of a structure. So logically, price is going to be revisiting these bottoms right here, here, right? And take them out before we continue the upside. All right. Next thing that happens, we have a zone from here marked, right? Can we do? Again, draw, 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 draw. Look, perfect. You get a 1 week, 2 weeks, 3 weeks into this zone. Before, what happens? Another rejection. Can you imagine, guys? Another rejection. Now, what's our next target? You're gonna ask me, well, hold up. We took out the previous liquidity here. What's the next target? Are we gonna move down? What's gonna happen? Well, look for imbalances, guys, okay? For imbalances, right? So, naturally, you're gonna be seeing this one. One candle, two candles, three. See imbalance in between. Draw it. What do we see? Price comes down, right? That, 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 that. Fully goes through this imbalance zone, okay? What that's gonna tell you is that this zone is not respected, okay? Even if price rejects, closes above it or whatever, it tells you that the zone is not being respected, okay? So that means you need to look for another anchor in this game, okay? So let us delete this zone, okay? Some people would have taken the trade here, but you will see the issue after, okay? This can. Gonna mark this one out too. We need to look for another zone. Where's the other zone? Let's see. The big move, okay? Always, guys, when you see a big, big move, that's where the big money is, okay? So you just have to follow the money if you want to succeed in this game. Let's draw the zone here. Another imbalance, right? Does this look? Perfect touch, right? Does it respect the zone? Yes. That's the zone you want to be having drawn on your chart, okay? You don't want to be having any other zones drawn in your chart except for that one. That's what happens. Price touches the zone and then quickly moves away from it, okay? And now we're working with this. This big zone that we had here from before, we can keep it if we want to. This zone is going to have a higher priority, okay? Because it's a way more fresh move, okay? Like you don't want to trade zones that are from 2 weeks before, you know? You want to be looking at where price has been moving recently. And you want to make sure it's as fresh as it can be, okay, guys? Because that tells you more than the zone you had drawn on your chart from a week ago. All right? So this is the zone we want to be playing with. I'll be coming back to it later. Now I'll be just deleting this one so it doesn't get confusing for you guys, okay? Just be deleting this one. But we'll come back to it later. Next thing. What do we have? Price rejects once again, right? Here, get another wick. People that were entering this zone thinking, oh, it's going to be respected and everything. Well, it didn't, okay? We get a move to the upside. We move, 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 move. We come up here, right? We have this old zone. That's what you're going to be saying to me. Hey, but we have the old zone, right? Just draw this. It should respect this zone again. What happens? We enter it and we start trading within the zone. And once again, what do we see here? Look at the volume. Look at the candles. You're going to be saying, oh, well, Nordic Trading Lab, what? What? This is probably going to be moving down now, right? Do you see the pattern? Third time, okay? Like the market doesn't get any better than this, guys. But here's the thing. You're gonna be asking me, why is price not respecting this zone now when it did it before? Guys, the simple answer is because drum rolls, liquidity has not been taken, guys. That's the simple answer. Liquidity has not been taken. That's why it's not respecting the same way uh, as it should have before. If I put this to you, is it gonna make it any more clear for you guys? It is, right? Here's what you see. We sweep the high, right? Sweep, respecting. Bearish candle to the downside. People are gonna be entering thinking, right? What do we have here? Bulls attempting to make a move, right? What do? We sweep this high now, right? Sweep, and then what happens? Beer step in, big time. Then we have this huge move to the downside, all the way down. Down, 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 down. And now you're gonna be asking me, hey, but what's the zone? In this case, where are we gonna go now? We have already swept this low from before, right? We have been here. We have been in this imbalance zone from before, right? We tested it. Let's see. Draw it again. But now you're gonna say, well, hold up, it traded right through the zone, as you said before. Doesn't that make it invalid? Ding ding. Here we go again. Pull up a new trick. Answer? Yes. Yes is the answer. So what happens now? Well, here's what you do. For precise entries, what do we do? Mark, you move here. This is what some people like to call order block or supply and demand zones. Here's the bullish zone, supply. What happens? Tap into it fresh, a single touch, right? And what happens? We don't get a single touch after that. This zone, just look at it. A single touch, guys. Now, if you wanted to take this trade, just like the others, you just placed pending order here. And let's say you placed your stop loss right at the bottom. You were just aiming for, let's say you were aiming for, had a huge weaker rejection. You would have had a 3.5 risk to reward ratio. Okay? Now pay attention to this price here. Everything is moving in a balanced way. You don't see any gap, right? You don't see any. That tells you that this is a controlled move. This is the way markets are supposed to be moving. Okay? This is the way price wants to be moving. All right, guys? If you just humbled yourself and placed your stop loss as soon as the trade went into profit at break even, it would be totally up to you guys where you would want to be taking your profits, right? You could be taking it at a 1 to 2. Let's say right here already. Would have been enough. Let's say here already. Or let's say you just gave it a run, right? You see prices trading beautifully. You're sticking to your H1 time frame. You're not going to the teeny weeny time frames. You just let it run. Let it play. 5 to 5. 7 to 1. Let's say a risk reward of 7. right? Possible. Everything is possible. Worst case, you lose it. You hit another one. That's what you need to understand, guys. Beauty of price action and keeping it simple. Okay? Not 150 things on the chart, keeping it nice and simple, right? That's the key in trading. And that's what I break down. Next thing, you're going to be asking me here, okay, well, where should we be placing our stop loss, our take profits? Sorry, it's kind of late. Well, we have something called the Fibonacci. You can use this as well. What do? Draw from A to B, right? Let's see. What do we have here? 88.6. Perfection. Perfection. Now, is there a reason for price to go higher than this? If you look strictly on price action, there wouldn't be a reason for price to go higher. Why? Because the liquidity has already been taken here before we initiated the move down. Are you with me on this? The liquidity has already been taken before we took the move down. All right? So, the normal thing you guys could do in this case is just look at where liquidity is sitting, right? Usually, it's the wicks because the wicks don't lie. What happens? You have a perfect zone here, okay? For taking profits. You could have put your TP right here if you wanted to. You could have taken it down here if you wanted to. Whatever makes you happy in the moment, okay? Whatever you settle for. Or you could have just taken partials and let the trade ride. Works too, right? Or here. It would be the same thing. And if you were still holding, you could also watch it, react to this zone, down. What happens next? It comes right back up. Almost test this zone before it decides to move down again. Okay. Now here's the thing that I was talking about before. What happens? Whenever we make a new high, there's always some sort of liquidity sitting there, right? Now, in this case, we did respect this zone before, right? It did not get traded through at all, not even wick through. So are still sitting within the zone. But what happened here is I just delete the zone, right? One? No, actually we can use that one before. And we put it here. The high. Look at this perfection. Touched with precision matched unlike nothing else. Why? Liquidity, guys. Because the liquidity has not been taken. This is not a spontaneous move. Okay? You need to understand, guys. It's not a spontaneous move, okay? Markets can move in many ways, news, etc. But why the market decides to move up? Here, respect this zone, wick right here, is because it has been engineered to be moving that way. Okay? And what happens immediately after? You know, we move faster, the Formula One cars go out of the depot. All right? Go straight off. Bam. Now what? What happens now? Well, look at the clues. Big move, right? One, two, three. What do we have? Another imbalance. Let's see. The price respect the zone? That's pretty much it, guys. For the next week, I might be jumping on and live streaming a few trades. Not, I usually like to trade for myself quiet. It's way easier and less pressure. However, if you do like this breakdown, it gave you something, hit the subscribe button. I also have a website where you guys can sign up and hopefully learn some of these tips and tricks. As you can see, I trade in a totally different way. People do, very unconventional, um, and very straight. But concepts to learn. And once you learn the concepts, everything is gonna be looking way easier for you guys. All right. So if you like the video, make sure you leave a like, subscribe, um, sign up through my website. I have a little waiting list. If you're interested in learning these methods, like I said, you don't need anything else other than price action and proven strategies to win in this market. And of course, somebody that's going to be guiding you, telling you things, um, so on. I'm not quite sure if I'm going to jump into that step yet. I'm still thinking about it. But list is open. So sign up while you can. Comes, I'll let you guys know, okay? Regarding this. All right. Thank you for watching. And please do subscribe, guys. And remember, I'm doing this literally um, just for fun and to teach. Uh, because the markets are not complicated, people are. So don't overcomplicate it. All right? Peace out.